and welcome to yet another video of trade breakdowns of the trades I took the past week. So for a start, I'll remove all the drawings and go to my high time frame, what I was looking at. So I went to my weekly, as it was a new week, to see where price action was likely to go. So as you can see, we have our key level here, the body of the order block, and we also have this key level, unmitigated wick, and we've had and this was another key level I was looking at. This was before this price action. Okay, so since the candle had closed here, I was also looking at the unmitigated wick, which is this one. So I then went to my daily to look at how price is moving, and on my daily I marked my key levels. So this was a mitigated key level. As you can see, price had mitigated this unmitigated wick, and price was most likely to come for this high. This high was also our previous week high that I was looking for price to sweep. Okay, then I went to my H4. On my H4, I had my structure like this. That's a run on liquidity here, and the BOS making an H4 low. So this was my H4 low, and my H4 high was up here. I have my run on liquidity here and my break of structure right there. Okay, so that was my strong high. So I'll just move this to the right because it's not yet mitigated, so it's a key level I'm looking at. This is also a key level I'm looking at. Right, so when we had this confirmation of the H4 range, we now have a range from here to here. So price is most likely to pull back into these key levels before giving us another QM to continue for the external range liquidity here. Okay, so price gave us a QM here. So I'll just delete this line and focus on price action. Price gave us a QM here, so it means that on lower time frame we're now bullish. So if price creates a QM, most likely this is a strong high on lower time frame on H1. If that's not a strong high on H1, this is most definitely a strong high on H1. So let's go to our H1. H1 is here, and for sure this is a strong high that has been broken. So if a strong high has been broken, we start our trend on H1 as a bullish trend. Go to my H1. So when we have a bullish trend on H1, what do we expect for us to have a range? We expect a QM. So we had our QM right there, confirming our bullish H1 range, like this. So if you put your premium and discount, this is your discount and that's your premium, and price pulled back into the discount. Okay, so on Monday, which was this day, I was looking at my M15. So this is what I had on M15. Price created a low here, okay, and this low, I was expecting it to take out this high, but what happened? Price gave me a QM right here. Okay, After price gave me a QM, I wanted to see why price gave me a QM here. Is this a trap? Is this a trap here for me to buy, yet price is actually continuing down? Or is that QM a continuation to go down? Okay, so I then looked at this leg. We didn't have any internal range liquidity here. So what did price do? Price generated the liquidity here, okay, and created a T2 setup for sales here. Okay, so when that happened, I knew that this is most likely our target, this one, because we've had a QM and we've had a T2, and price had mitigated most likely this order block on M15 right there. So when we had this QM, you can see that this is a strong low on lower time frame, which is our M5. All right, so we have a range from here on M5 to here. Then we had our BOS here with the M5. So once we had that BOS, when price takes out a strong low, it will then create strong highs. Let me just explain this concept. So if we have a range like this, strong low, strong low, strong low, then price breaks this strong low, it's most likely to start creating strong highs, until that strong high is taken. Then it will start creating strong lows going up. Okay, so when this strong low is taken, it's most likely a QM on the higher time frame. As you can see here, we had our QM on H4. Let me just show you what I mean. On H4, we had a QM here. Okay, when that QM was formed, it meant that the H1 strong high had been taken. So if the H1 strong high has been taken, it means that H1 is supposed to start creating strong lows. So that's a strong high on H1. Okay, so once that strong high is taken, price is most likely to create strong lows. Strong low, price breaks, create a QM here, and creates another strong low here, and continues to go up. So that's the same concept I used on the lower time frame, which was my M5. So on the M5, we have our strong low taken here. After that strong low is taken, I'm waiting for M5 to create strong highs. So you can see here we have a strong high on M5. Then price came down here. Okay, created a strong high again here. Okay, then we have another strong high created right there. Okay, so I'll put this dot here. Okay, that's a strong high created on M5. So we then had a BOS here. Then we have this low. So if we have this low, M5 is supposed to create another strong high. So where is it going to create a strong high? After taking this level is liquidity. So that's where I saw my strong high being my liquidity being taken and price creating a strong high. As you can see, this is the range from here to here. For price to invalidate that range, it's supposed to break this high. So if it breaks that high, it means that on the M15 it would have created another QM. That would be a valid QM for me. So let me go to my M15 like this. So this looks like a QM on the M15. Okay, so most people are trying to buy from there like that, yet they are the trap here, because M15 is creating a continuation of this range on the lower time frame. So the only time I would look for buys is when a strong high is taken, like that. That's a valid QM for me. Okay, so if we go back to the M5, I then looked at my key level, and my key level in this instance was this imbalanced fill price section. Okay, let me check my M15. I think I took it from M15. Yes, M15 imbalanced fill price action. Why did I use the M15? If you go on a H4, you can see that we had this candle. Okay, the key level on H4 would be here. Okay, unmitigated wick on H1. On H1, the key level would be here on this unmitigated wick, this one. Okay, then on M30, we will use the same because liquidity is here. We don't have any key level here, but this unmitigated wick. If we go on M15, this is the imbalance fill price section that I used because it's the closest to the liquidity, which is this one. Okay, so I went back to my M5. I'll delete this key level because I didn't end up using it, and this one because that's the H4, which are too far away from the liquidity. So my entry was right here on the key level. Okay, my stop loss, I think I used the 6 pips stop loss. Yeah, I used the 6 pips stop loss because that would invalidate this range. Okay, so when that range is invalidated is where I know that I'm on the wrong side and price is actually buying. So that was my entry, and my target was actually this low because of the range from here to here. So price pulled back and is most likely to take this as external range liquidity. So I then put my target right on here for 1 to 3.6 hour. So that's the first trade I took. I'll show you the second trade I took. Okay, so this was on a Thursday, and this is the second trade I took, and I was expecting price to at least reach this key level, this one. So I was bullish on lower time frame. As you can see, price is making lower lows, higher lows and higher highs like this. Okay, so I was expecting this continuation. I went to my H1, and on my H1 I had this BOS. Okay, then from this BOS, this was my new H1 low. Okay, then on H1 I had a QM. I had a QM right here. Okay, I had my QM, but as you can see, we didn't have any close internal range liquidity. So price was supposed to give me either a T1 or a T2. A T1 would be something like this, break that high and come and mitigate maybe this unmitigated wick and go. That's a T1. Or price can give me a T2 where price would make bullish structure so that people try and buy from here, yet it's actually using this as liquidity and mitigate that unmitigated wick to go up, creating a trend line over there. Okay, so now we had this high on H1. I went to my M15. Okay, so on my M15 is the same scenario. We have the low here, we have the low here and the high here. So this is our dealing range. This is our dealing range. Okay, so I'm waiting for a T1 or a T2 in this range like that, and price to continue up because there is no internal range liquidity here. So what did price do? Price then came here and took out this high. That's the high that was taken on M15. Let me just zoom it in. So you can see price moved like this, came down, went up, came down, went up, it didn't break this high, okay, then broke this low. Okay, let me make it clear. Okay, price didn't break this high, okay, but this pullback This pullback broke this low here. Okay, then I waited for this high to be broken here. Okay, so when price broke that high, I looked for entries here. Why? Because this is creating our T2. Let me explain the T2 again. I think I explained the T2 in the previous video. So I'm looking for a T2 like this. Okay, price breaks the high and people try to buy here. Okay, like that. But because this low did not take anything on this bullish leg, it means that this low is a trap. Okay, that's the liquidity that's going to be taken. So that's the same thing that happened here. Okay, price then took this high, and most people are looking at this as a bullish structure, yet it's just a T2. People are trying to buy from here and they get stopped out. Okay, so once this T2 is set up, I'm looking for trades right here. Okay, so I looked for POI here. My POI was this one. Okay, that was my POI, and on my broker this entry was missed. Okay, when that entry was missed, I then looked for a shift of structure. Then we had our BOS here. Okay, so like I was explaining before, a BOS or a QM on higher time frame is a strong high being taken on lower time frame. So on M5 you can see that this is a strong high. Okay, that's a run on liquidity and a break of structure here. So that's a BOS. So if a strong high has been broken, it means that we're going to start creating strong lows. So price created a QM, and that's our range from here to here. That's internal range liquidity, and price came to mitigate this unmitigated wick to go up. So my entry was simple. We had our range from here on M5 to here. That's our opposite QM. All right. Then we have our internal range liquidity right here. Then we have our unmitigated wick right there. Then the entry was right on that level. Okay, stop loss was 4.5 and target profit was external range liquidity of the range. Let me just check if I didn't get a tighter entry. I don't remember. I'm just going through the price now. Let me check the H4. H4 we have an unmitigated wick here. H1, what do we have? In H1 we don't have anything. As you can see, this is a wick, and this is a wick, this is a wick. We don't have anything below this unmitigated, below this internal range liquidity. Let's see 30 minute. Let's see M15. M15 is the unmitigated wick, so probably I use this unmitigated wick from my M15. Yes. Then let's see M5, unmitigated wick as well. So that was the entry, and external range liquidity was right here. But as you can see, the main external range liquidity of this range is here. Okay, so I held this trade until here. So I made a 7R on this trade. Why? Because I had my T2 here, T2 setup, and I had my range from here to here, and the range cycle is most likely complete because it came to mitigate a higher time frame POI, and price is going to take external range liquidity. That's our range cycle. So this was a 7R trade for me, and I should just keep going forward, and you can see that price took the high. Okay, So that was the 7R. So 7 plus the, I think it's a 3R trade I took somewhere here. The sell I took somewhere here. Yep, it's here. I think this was a 3R. I think this was a 3R trade, I don't remember. Yep, somewhere there, like that. So 3 plus 7, that's 10R. Okay, so with this strategy, even if you take 8 losses in this instance, if you take 8 losses, okay, and you have 2 wins with a total of 10R, okay, then it means you have minus 8%, then you have 10%, then the balance would be 2%. So no matter if you take too many losses, as long as you have the good setups, you can always be profitable. So for me, I don't trade every setup. I just make sure I trade the best setup according to me, and then I maximize on that. And yeah, happy days. So if you have any questions, please let me know. But this is the breakup. This is the breakdown of the trades I took this past week. I also had a NASDAQ trade, but it's out of the scope of this breakdown because I only trade Euro USD. But the NASDAQ also had a very beautiful setup that gave me another 1:3. So let me know if you have any questions. But thank you guys so much for watching. Catch you later.